Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. What we're here to do is talk about the economic data, see how that impacts markets, and then ultimately I will round it off with talking about some opportunities I find in the markets that we can implement into either a trading portfolio or even an IRA. So if you want to learn a little bit about that, stick around, smash that like button, make sure you guys are hitting the little bell right next to that subscribe button, because that will give you the indication as to when we pop in here unannounced. We aren't just always doing this at 9:30. We are making this happen when it is most appropriate, if you will. So comment over at the side if you want me to cover anything over there. I'll keep my eyes on it, making sure that everybody has clear concept. So if you want something to be covered, throw it over there. Or if you just want to talk about something, I'll be happy to chat back and forth with you. And smash that like button. What that does is it feeds the bots when I share some information you find that really strikes you as a light bulb moment maybe. Smash that like button for me. It'll send the bots out there to find somebody just like you. All right. Without further ado, let's get on with the economic data. Today is the day we get the PMI that I've been talking about, Purchasing Managers Index. This is very forward-looking, folks. This is heading into a holiday season. We want to get into the mindset of the folks that are actually seeing the demand firsthand. We all kind of feel like we see demand when we go out. We can see people in the malls and the brick and mortar and things like that. That's not really telling us anything. The folks that are actually seeing the purchasing are those purchasing managers, and they are the ones that are ramping up production in order to meet that demand. So that's why I find it so fascinating to really dig into this number, because it is one of the best forward-looking numbers we have. All right, so without further ado, it is a bank holiday. We could see later volumes here because of the Japan bank holiday, but at the end of the day, I think this week in general is going to be pretty light anyway, despite the fact that we have some pretty good economic data. All right, so across the pond, we got the flash PMIs. Anything above 50 is expansion. Anything below 50 is contraction. We've been seeing these numbers come in a little bit lower than expected, giving us a bit of a concern here as to the health of the economy. Well, when you lower your expectations, you have a tendency to be able to beat those expectations. That's exactly what's happened here. We've lowered expectations from the previous months, and we came in today and beat those. So flash services PMI for French. Remember, they're the manufacturing sectors are Germany and France. So that's what we're going to be looking for on the manufacturing side, service sector in general across Europe. But the flash estimate for the French services PMI coming in at 58.2, expected to be 55. The manufacturing coming in at 54.6, expected to be 53. German manufacturing 57.7, expected to be 57. The flash estimates for the service sector in Germany coming in at 53.4. Now moving to the broader European region, we kind of bundle everybody else together here, and we got the flash manufacturing PMI coming in at 58.6, expected to be 57. The service sector coming in at 56.6, expected to be 53. And then Great Britain, manufacturing PMI 58.2, expected to be 57.2, and in line with expectations on the service sector, 58.6. Now, we'll get our own PMI numbers here a little bit later on, about probably 30 minutes or so, but we really look for our Institute for Supply Management, the ISM manufacturing PMIs. We'll still get our flash estimates, but we look at the ISM for our data points. All right, so let's share the screen here and get on with the markets here. Why is it sharing that one? What's that? Oh, that's what we want, something like that. All right, so crude oil. Something to talk about here with crude oil. We're seeing a bit of a move to the upside, which is counterintuitive to what's going on in the markets. 50 million barrels of reserves are going to be released. 30 million of those are going to be auctioned off. 20 million are going to be released. And that's barrels, folks. So we're talking over 50 gallon or right around 50 gallons a barrel. I can't remember if it's 35 or 55 anymore. But anyway, a lot of oil being released. And that's right after we kind of crimped our production here in the United States. But this is releasing the emergency oil reserves for political reasons, trying to drive this price lower, but we're seeing that move higher. Why? Because that might just spark Saudi Arabia or the Middle East to cut back on some of these production increases that they've been talking about. I think it was close to 500,000 barrels a day on their production increases. Well, this could throw a wrench in those cogs and cause them to pause on increasing any production rates if we dump our oil now. All right, so gold coming off quite dramatically yesterday, just like literally falling out of bed, not getting any support really today, maybe around the 50-day simple moving average, and the fact that we're right back to the point of control. It's very close to 1800 that I've been talking about as that psychological support and resistance area. Well, it's become a target now with the point of control lining up with that. It won't act as much as a support and resistance as we've seen in the past. So markets come back down to the point of control. That's where the overall market finds value. So same with Bitcoin here. We found that it has come back to its point of control. All of these finding support on the 50-day simple moving average so far, though. VIX coming off after yesterday's sell-off. Well, we had the Dow Jones Industrial Average finish in positive territory, but there's a couple of things I want to talk about here. Engulfing pattern yesterday is very bearish, and I'll show you something on the other charts that we can look at as well. Finding bottom here? I don't think so. I think we're going to continue to see some weakness here. Dow Jones Industrial Average did finish in positive territory, albeit just barely after giving up over 250 plus points of gains yesterday. But when we're looking at these two chart pattern setups like this, you've seen me talk about these. These are continuation patterns, folks. So although it may feel like we are finding a bottom here near this Fibonacci, we are still looking at it as a pattern here that would be very much a continuation pattern with these underlyings. E-mini S&Ps, again, similar situation. We did break out of that trend channel yesterday. That is very bearish. And then today, finding maybe a little bit of a support, but I think that these are continuation patterns. It seems as though some of these earnings that we've been getting recently, not so great. Best Buy coming out, missing on their earnings. I'm going to talk about that here in a moment. But I think some of these retail brick and mortar folks are not seeing as much of a influx early as they were expecting. We're going to really have to see after this week what's going on with the retailer there. And you can see yesterday just some real weakness throughout the day. Coming into today, no real support whatsoever. All right, so let's get on to the markets. Well, if the equities start falling out of bed here, then I am going to be a little bit more concerned about my December 152 calls that I got short. Now, you guys remember I sold those at 133. Generally speaking, for you folks out there, I talk about getting out at 50% of max profit, which would be right around 60, 65 cents. It's trading 54. So I'm working an order here to get out at around 32. I've been working this order for several days now. One thing I'm worried about is weakness in the equities could give a boost to the upside here in the bonds, as it is a flight to safety. Anytime we see massive corrections in the equities, we will see a lot of support in the bonds, as it is a flight to that safe haven asset, if you will. Therefore, I'm going to be concerned about my 152s getting tested if we see a real correction here in the equities. So looking to cover this trade for 32 cents, like I said, working that order. Last I checked, I think it was trading around 54 on the settlement. So some more volatility coming out, maybe even just pin here at this point of control. I could get out of this trade here as well. Then we're looking at SPY. You guys remember I have on the long iron condor in there, which is basically just a strangle with defined risk, a long strangle with defined risk, trying to lower that overall cost basis that I laid out for that. So with that said, the market has made an incremental move to the upside since that point, and I have on the put side's not doing anything. I'm long the 430 puts and then short the 410 puts to define that risk. That part of the strategy is basically worthless. But where I'm making the incremental gains is on the call side of the iron condor. Remember, it's basically a long put spread and a long call spread. So now I'm talking about the long call spread aspect of this for the pop or drop. And I got that pop. The December long the 455 calls and then short the 475 calls. I usually say wait till it comes up there and clips that short call. That's when we're looking to cover that. Well, I've kind of worked this quite a long time. It's starting to peter out on this momentum to the upside. So that all being said, I'm looking to cover this trade today for $14.20. I've got a working order to get out of that. At $14.20 that we got long on this trade. For the swing trade, you guys, that's when we put on this strategy was for the long iron condor around a swing trade. We were looking for the pop or drop, whether it was going to make a move to the upside or the downside. We did this on the 17th of 9/17 here. This was when we did the trade on it, making this move to the upside. Pop or drop, I was looking for more of a correction here, but a pop or drop going to 475 or 410, not really sure, but we were playing that as that pop or drop, paying $10.20. Like I said, I'm trying to get out for $14.20 on this. Does not look very good. I'm going to have to probably menage this a little bit today to try and get out of it, but that is something I'm definitely looking to get out of here. And then Best Buy, earnings yesterday, miss on this. We have high volatility, topping pattern, quintessential on this topping pattern here, looking for a confirmation. We're going to get that today as the open is expected to be somewhere around 10% lower. So with that said, I'm trying to get in there at the 141 calls to get short there at around $3.20. Now they settled around $5 yesterday, but I'm looking for about a 10% drop. That would be about $3.30 coming out of these premiums on just that move. Now, I'm expecting volatility to expand a little bit. So being able to get out of this at around, or get into this trade around $3.20 is, I think, very probable. So we're going to see how that works out on the open. I've got a working order in there pre-open on all of these trades to get out of TLT, to get out of the SPY, Iron Condor, and then add some Best Buy to my overall portfolio there. And that's what I'm looking to do. If you guys don't have any other questions, comments, or anything else, I'll get on with it. Otherwise, I'll have to circle back around to make sure you guys are clear of concept. And before you go, make sure smash that like button, feed those bots, and subscribe, hit that little bell right next to it so that you guys get an indication as to when we're popping in here, because sometimes it will be unannounced. All right, that's all I got for you guys. Have a great one. I'll see you tomorrow. And if you can't take that, take it easy.